Hi everyone, and welcome to my weekly segment for CMC Markets. Today is February 27th, and you'll be hearing this at the start of tomorrow. Of course, PCE numbers coming out this week. Right now, it doesn't look like the market really cares very much about it. Of course, that can change. My name is Michelle Schneider, by the way, Chief Strategist of MarketGauge.com. So what I want to go through is some of the basic outliers in commodities that will help you trade tomorrow, and also to look at going forward. What I'd like to do is actually start just with a straight look at the dollar, because the dollar, as I have been talking to you lately, has really been in kind of a trading range. And even though we are above the 200-day moving average, the 200-day moving average being above the 50-day moving average means this is an accumulation phase, not a bullish phase. And interestingly enough, we have the same thing going on here with the momentum. So the momentum and the price right now are both showing accumulation, not bullish, and that of course can change if it turns down under the 200 on both price and also on momentum. So where would the dollar get into trouble? Well, first of all, if you look at a bigger chart, like a monthly chart, you would see we're under the 23-month, which means that we are basically in a downtrend or sell rallies type of situation. And then that would really get interesting if we broke down under this low right here, which is at 102.74. So 102.74 is kind of like my rock bottom support level, where we could still say the dollar is getting a bid, and under that we would start getting negative. And of course that would have other implications for other markets, particularly the commodities markets, but the equity markets as well. So I just wanted to show you that, because as you're going into tomorrow, look where this landed today. The low today was 103.54, which is exactly at the 200-day moving average. So if you want to keep track of the dollar as we're going into PCE, under 103.54, I think maintains more of the negative bias with that 102.75 in view. We stay above that level. If you look at the closing levels that we had today and the opening, they were so close to each other, basically at around 103.70. So above 103.54, we look at 103.70. Above 103.70, I think we have to have at least a very short-term bullish bias, with the next point of resistance coming in essentially at around 104 to 104.10. There's been a lot of interest in the dollar yen because the Nikkei has been doing very, very well. They had a little bit hotter inflation come out today, but nonetheless, this is the dollar leading the yen. So right now, of course, you can see the dollar is still strong versus the yen. And when we talked last week, we said basically this is just all within a range of this one big bar right here. And that has not changed all these trading days later. So the high of that day was 150.88, and the low of that day was 149.23. Anything in between is kind of chop. So you should probably keep track of those numbers. If we get above 150.884, then I would say that there's a really good chance we're going to head up. And where could we go? Well, obviously we would be looking at some round numbers, but I would say the first area would be 150.142. And on the flip side, considering we've made some higher lows here over the last several days, if we break down under today's low at 150.07, then we would have to look at this low at 149.50, but ultimately it would be this low at 149.23, that big bar day that we would have to watch. And of course, if that breaks, that will be bullish for the yen and not so much for the dollar. And speaking of trading range, here is gold futures, really gone nowhere in a hurry. However, that's a good sign and a bad sign, right? So at this point, we're flirting around this 50-day moving average. Here was a big candle that we had from last week. But meanwhile, so far, last 2 days, we've been inside that. But overall, if you just step back, we've kind of been in this trading range really since this day right here. And at this point right now, I would say with the high of this day, which was 2042, which is also kind of where we closed today, that 2042 is our near-term pivotal point. Above 2042, we're going to have more of a bullish bias. Below, more of a negative bias. So if we're going to have a more bullish bias over 2042, what do we have to look at? We have to look at what happened at the close here this day. That level was 2049. So then we'd be testing that 2050 level. And then above 2050, then we're starting to look back at some of the resistance that we had up around here, which was 2055. You can see there's a lot of resistance all the way up, which really doesn't clear until we get back through that 2100, and then under 2042. Of course, the first place we would look at this low would be 2034, then this low of this day, which is 2025. That 2020, 2022 level has been somewhat pivotal. We break down under there, then I think we have probably a deeper correction in store. And of course, since I've been showing you the silver market, the reason why I'm believing that right now the market isn't terribly worried about the PCE number, even if it does come in a little hot, is looking at the silver. So now we did talk about the fact that it got right up to the moving averages and couldn't get through, and we were hoping to see it through 2350. But instead now here we are with 22 in our sights. If this does not break down under today's low, which also happens to match this low at 2240, so under 2240, today's low being 2240 and a half. Under 2240, I would say, even ahead of PCE, we have to probably test some of the lower regions, maybe even break this Bollinger Band right here and go back to another mean reversion where we had this rally, where this went back over the Bollinger Band and then we literally went from 22 up to 2350. Maybe that's what we would need to do, is have another test of 22. Maybe we wouldn't even get as low as 22. Maybe we would get more like 22.15. But nonetheless, that's the ballpark we would have to look. And then we would be waiting for some kind of a mean reversion, because we will start to get into some support. And I still believe that silver is so undervalued. Above that 22.42 level, right here, or 22.52 level, let's see where we closed today, was at 22.45. So let's say above that 22.42 level, then of course we could start to see this move back up, because the perception would be that this is hanging tough, and that's where we would have to look at numbers like 2280. That's my real pivotal number. It has been my pivotal number for quite some time. Above 2280, of course, then we're back looking at what happens at around 2320, and once again over 2350, then it goes higher. So that's why you have to keep an eye on the gold market, because the silver market is telling us that things are not inflationary, but it also is telling us that not much about the economic growth, even though we're seeing a lot of the other areas in the market telling us that there is economic growth. It's a little bit confusing, but suffice to say that silver will be very important, because if it turns up, that pretty much tells us that inflation may be really on the way and not just a couple of months of sticky inflation. And what could turn the silver market up would be oil. So right now we have, again, a big range. I mean, look at how choppy this has been. I'm going to blow this out. We've literally been trading between $79 a barrel and $50 a barrel. So within that range, of course, that's your bigger range. On a much nearer term, we get through 79. We still want to see a move over 80, because we're going to go back to this resistance here. And if we get through 80, then I think all of this work that this has done since November looks like a big base. And the longer the base, usually the bigger the move. And so that could mean getting us back up to $90, $95, etc. If we can't get through 85, your pivotal area for tomorrow, of course, is going to be where this thing opened today, which is at 77.62. Above 77.62, we're going to have a bullish bias. Below, then it breaks back down under that 200-day moving average, in which case then we're back at looking at 77, and then 76.50, and then 75.50, and then of course under that our next area would have to be closer to this 50-day moving average. But it would also mean probably that gold sells off and the silver does break that support. So that's why I'm calling oil the X factor. Through 80, I think it would be very hard to argue a bearish case for the precious metals. And here's another reason why the market doesn't seem to be terribly concerned about war or inflation at this point, and that is if you look at the SPX, in spite of the fact that we did have yet another new high reversal where the next day it closed below, hasn't really gone very far to the downside. That doesn't mean it won't. But right now, I wouldn't get terribly concerned unless it broke down under this 5,038.83. Then, of course, we have a gap to fill, and that gap to fill would be up to this high at 49.93. So that's, a nice little move to the downside. However, if it holds, Once again, just like I showed you the last time we had a new high, is once it takes that out, the move continues. And of course, that high is 5,111.06. But let me bring your attention down to here because the momentum is declining more than the price. When we've had mean reversions, they haven't necessarily played out very well. But if you look at the overall momentum here, what you can see right now is that the momentum made a new high on this day, and it's coming off more gradually. It's not bad, but if we do break down underneath the Bollinger Bands, that could mean a bigger correction is coming, but still a correction. If we break down under the 50, just like if we break down under the 50 in price, but particularly momentum first, the last time we've been under the 50 was all the way back in November, so that could yield a more serious correction. And speaking of inflation, I just wanted to show you quickly a chart of wheat futures. Had a nice move up today. We did have a bottom here, and we didn't quite match the bottom here, so we do have a nice little 60-plus day low with an inside day. Didn't get great follow-through, but nonetheless, this did actually show a bullish divergence in that A, it never broke down under the 200, although the price is below. B, we are now back above the Bollinger Band, another mean reversion. And C is that if we can take back out the 50 and we see this price getting higher, particularly if it can take out of the 50 here, which is at 600, then I think that would be just another shot in the arm of inflation. And that would, of course, would affect the silver prices, the gold prices, the dollar prices, and possibly the SPX, all the numbers that we just pointed out. And the last chart I'm going to just show you for fun, even though I'm still not terribly interested in it, but it did make a move today. So natural gas, I mean, you can't really get too excited about a move down where this went. This is spot, of course, down to the low of 156. But it has made a pop from there. So the question is, can the pop continue? This is definitely a classic reversal type bottom where you had a new low and a big explosion day the next day, and now here we are even above that bar. So I would say we now have to look at the top of this high right here, which is 186.3. Above 1.863, yeah, it's possible that we can get a move up. Where can we go? Obviously, we want to see what happens at 220. Could this fill the gap? Well, that would be an interesting move up to the 50-day moving average of 232. So would I be interested in buying it over 186? Well, I would have to have a good risk point and a tight risk point, and I think my best risk point would be the close of this day, which is 176, which was the open of this day at 176. So let's put 176 down. It breaks out 186. Under 176, we're gone. Holds 176, maybe we wind up getting up to around that 2 or 220. And looks what's happening here. We've got a potential reversal happening in momentum with the Bollinger Band possibly showing some kind of mean reversion. Okay, that's it for today. Thanks so much for watching. I'll see you all again soon, and have a wonderful trading day. Bye for now.